Kunal as well as Nooresh with us on the show. So let's start with just that. Kunal, 21,600 was, kind of breached, but then we kind of came back from that level. And ditto can be said about Bank Nifty as well. But at least 48,000 is being held. What are the levels to watch out for from here on?
So yeah, I think 21,500 could be a support for the index on an intraday basis, even on a short-term basis. I'm assuming till the expiry tomorrow, and 47,850 now on the spot Bank Nifty would become the first leg of strong support for the index. I think the only change which you're seeing today, one of the changes which you're seeing today for the banking index is comeback of the PSU banking lot, where you've seen the likes of Bank of Baroda, SBI, Canara Bank, etc. making a strong move for themselves. Individually, many of these stocks are showing signs of a breakout. So I think that's a positive sign for the markets, and especially for the Bank Nifty.
In fact, PSU banks is something which you marked, but beyond the banks, PSU is actually cooling off. Remember, there was a one-way rally which pull up the Nifty PSE index. You would see Power Grid, NTPC, several of these IREDA we've already seen. A lot of PSU which have done phenomenally well, but now are kind of, on the verge of stretching their valuation just beyond logic. Those kind of names are witnessing a good amount of pullback. Let's see how it goes from here on. But otherwise, last couple of days, only the large cap, the ACCs of the world, some Ambuja and maybe Ultratech was seeing. Now we are seeing broad-based buying after that report from Nomura as far as the cement space goes. Otherwise, okay kind of a market. Several IT names are doing well. Consumer names are also doing okay. It's a mixed kind of a market, auto as well. But Mahantesh Sabarad is now joining us on fundamentals. Mahantesh, afternoon. Thank you so much for your time. Beyond say PSE basket, not PSU banks, which is correcting, one section of the market which is helping is the beaten down Kotak and even HDFC Bank, which has tested the patience of investors almost 3 years now. Kotak is at 1900. Around 2000 is where it topped out last, if you pull up the slightly longer term chart. And at that time, it became the most valued bank, private bank in Asia. Even your HDFC Bank, the individual entity last time topped out around 1700 odd. Now the merged entity is available at 1700. How do you see these two names in particular on valuations?
So you're right that the market has been very patient with these two banks in terms of the overall returns that they've been able to generate in the past several years. But there's a reason behind that. And that reason has got to do with the fact that these banks have grown pretty fast in the past and have consumed certain other banks, so there have been mergers along the way for them. And they therefore received a lot of attention from investors in the past. Now it is back to basics where it comes to the banking sector per se. And when it comes to basics, they have to now perform well beyond peers. Even the PSU banking peers, particularly SBI, which is the largest bank, has been doing particularly well. With the NPA cycle now down, all these banks are actually struggling for growth ahead, and this is where the PSUs are doing relatively better than Kotak Bank and then HDFC Bank. So I guess that there'll be a little more wait before these banks start doing well. Particularly these banks are consumer facing, I'd say more into personal banking kind of activities, personal loan kind of activity, which has kind of peaked out for the time being. So it's a matter of little more patience before these banks will start really doing well. 3 years is a long period of an underperformance that we've seen for these banks.
Actually, I would request to kind of pull up the graphics of, the top drags on the Nifty and top contributors to the Nifty, record high level that we saw, because a very interesting trend that my colleague Singh and Vamakshi had pulled out. While on the contributors, it was HDFC Bank, which was the top contributor in the last few days. Reliance, Kotak Mahindra Bank, Airtel and Hindalco. The key drags on Nifty was ICICI Bank, Bajaj Finance, Axis Bank, and even SBI and Tata Consumers. Nooresh, a question on this underperformance of ICICI, Bajaj, Axis, SBI. Any signs that they are likely to see a bit of a reversal?
So in terms of names, ICICI Bank still looks positive because it is retesting that breakout around that 1,000 mark, and it has been holding on around that 980,000 mark. It's not corrected much. It's just that it has not been bouncing as sharply as what we are seeing in a Kotak Bank or a HDFC Bank. But the structure looks positive. But Bajaj Finance, on the other hand, has continued to face resistance around that 8,000 mark, and in this recovery also, 7,700 has become a problem. So actually, the stock looks more sideways, and 6,800, 7,000 is the major important base. If that breaks, then the trend changes on the downside. So overall, Bajaj Finance looks like a stock which may stay in a very range of 6,800 to 7,800. But ICICI Bank at current levels actually is a good entry point with a short to medium term outlook, wherein the risk reward is pretty interesting with a stop below 970, 980.
Another stock which I want to discuss with Kunal, which is kind of a HDFC Bank in the auto space, which means it hasn't done anything much in the last 3 years, is Bosch. I remember very clearly, Bosch was so badly punished, I remember. They started talking about something EV at a time when, I mean, they announced a EV foray, market completely ignored it, punished it, because at that time, bulk of their engines and all the technology was diesel oriented. It took them 8 years, how many years?
8 years. 2015 is the top.
Last top was 2015. It's crossing that 8-year high level.
It's not yet crossed, but that
But in that near vicinity.
so 27,000 became 7,500, and
Yeah.
now it's
Wow.
22,000 again.
So 22,000 now, right now, was last seen in 2015, right?
Correct.
So it's now going back
Yes,
to it. and
yes, yes.
80% of the fall
It's
has
coming
been,
back into its prime.
at least it is retraced 75-80% of the
Correct,
fall.
correct.
So when this type of, if you can pull up the longer term chart of Bosch India, guys, if you can just also show it on the screen. So what does it show from here? Would you like to ride that stock long, or what do you?
Yeah, I think it's a good chart. So shaping up well. So volumes, when volumes make a comeback, we typically tend to say that the stock has coming back to its prime, and when the prices tend to move in a very trending kind of a manner, devoid of the volatility, that's also another sign of confirmation. I think Bosch has shown both those signs emerging quite well. In fact, the average volumes over the last 3-4 months has been on the higher side for the stock. It's managed to break out of the resistances, retracements, and even the major breakout which has happened for Bosch is that trend line. So from 2015, when the stock was at 27,000 levels, there was a major trend line resistance which the stock held on for at least 3 to 4 years before it started to sell off quite aggressively. So it's managed to finally breach those trend lines in just last 1 to 2 months. So that itself tells you the kind of change of sentiments for the stock price. So change of sentiment happens first, and then the prices get into a breakout, which I believe is the case for Bosch. So it's a good sign to go long as well as build up long positions over here.
Okay, Mahantesh, you've seen Bosch in its previous prime days. Do you think it will come back? Because EV now seem to be the flavor of the season. These guys announced foray into EV related parts some 8 years back, but did not get due recognition in these 8 years.
You have to look at it this way. The overall EV presence of a Bosch in India is pretty poor even now. For that matter, much of the EV space is yet to grow out into a large momentum in India, and therefore Bosch has taken a really long time to really grow in that business. So 8 years for a Bosch-like company is pretty small given its vast history that they have, and they're an engineering company at the end. These companies do recognize the trends that are happening, and they are able to adapt to the underlying trends. In fact, I would say that they were quite early recognized this in trend and started making arrangements for that foray into EV when virtually no market really existed in India. It has still a long way to go, and one should be cognizant of the fact that an engineering company like Bosch has the wherewithal to bring in latest developments, not just latest developments, actually out innovate existing players in certain areas, and I'm sure they should be able to better grow relative to the market ahead. Their engineering capability is just stupendous.
Totally point taken, but
The last few weeks, ever since Oil India actually came out with the volume target, they've shared it on the exchanges. ONGC as well as Oil India both are doing well, and a lot of being bet that maybe this part of the energy pack may actually start doing well. It's not moved much. Pull up the last 3 months or 6-month graph, you would see what I'm talking about. But the basic elementary question is that ONGC output on gas as well as oil volumes has been stagnating for decades now. Where will the incremental earning come from?
Yeah, that's the right question to ask from the company. Actually, these companies have seen stagnated production quite some time, and they're tightly controlled in terms of regulations as well. So, any avenue for growth should come not just from the domestic producing fields, but now will have to come from exploration outside the Indian geography. And there we find limited appetite being shown by either ONGC or Oil India per se. So, from an investor's perspective, I think it's better that these companies should be viewed as more as dividend kind of stocks and not necessarily growth stocks. Sometimes, in fact, even dividend stocks will also suffer because the stock price keep correcting. So these new targets that they have given may not necessarily be achieved going forward unless there is a resolve to get the capex going quite well. In oil production, it's but natural to expect that old producing fields will start showing a decline because there is a definite life to any particular field. And if you need to pump up the oil further from that field, you need to invest a lot more in terms of capex to make that oil field produce better. So it's a trade-off between higher growth achievable through higher volumes, but you need to spend a lot. So I would reckon that these stock movements probably are short-term movements.
In the meantime, Nooresh, what's happening to the stock of 3M India? We don't usually talk about that counter because it's not a big mover as it is. Today, the volumes are 28x the average that we have seen, and there's a sudden spike of almost 14-15% on that one. And the other one I want your view on is Vinati Organics. There was, of course, a news flow that we'll run for you as well, but that stock is perking up.
So 3M India is a pretty illiquid stock. Otherwise, the stock had been consolidating. Today, the breakout has happened, and it tends to make such spiky moves which are difficult to trade. And the stock is at a new all-time high, and we've seen all, say, capital good related spaces do well. So a fresh breakout here, but tough to trade this one. So it's a stock for an investor, not much of a trading bet. Going into Vinati Organics, the stock has gone sideways. Has not seen a correction sharply like the rest of the chemical names. It has just been drifting lower. So as of now, it looks like a one-day move, expecting it to remain sideways.
Point taken. In fact, on the auto sector, I want to scratch that point further with you, Mahantesh. Bajaj Auto, of course, the one that we have been talking about on one hand is doing quite well because they are sustaining growth is at least what DAM Capital is saying. But that brokerage house itself has come out with a note on the tractor industry saying that we are in for a big sequential decline in the month of December. Call it the impact of the floods and the unseasonal rains. But there's going to be a sharp dip in the tractor volumes. Within the three packs of auto, two-wheeler, commercial vehicle as well as passenger vehicle, which do you think is the best place from a risk-reward perspective?
I think currently the commercial vehicles are better poised relative to the other two that you named, the tractors and the passenger cars, simply because commercial vehicles seem to be now going up the cycle in terms of volumes. Plus, you also have an advantage coming in the form of better margins with overall commodity prices easing out a bit. That helps the commercial vehicle manufacturers in terms of their margins. As far as tractors is concerned, it too is cyclical, and we have seen an unusually high jump in volumes, particularly last year. Therefore, the tractor volumes are set to cool off pretty sharply, given the high base effect. Passenger cars is a nowhere kind of territory right now because you have subdued discretionary spends that are happening all across the board in any kind of consumer category that you are seeing. Plus, you have this whole phenomenon of electrical vehicles coming in, but adoption by customers is pretty tepid because there are a lot of question marks in terms of the cars availability itself, as well as the drivability of some of the cars on the electric vehicle side. So the markets, most of the buyers are actually waiting out to see which are the better cars that will come out with options that help them meet their daily, either the daily commute kind of requirement or the travel requirement that one possesses. So that's why I said we passenger vehicles are a nowhere territory right now. Commercial vehicles potentially can do better among the three.
Flag a few stocks. So 3M India is what we have pointed out, a 13% surge. Take a look at Amara Raja battery. Suddenly there's a spike of 5% on that one. You also have Chalet Hotel, which is suddenly there. Take a look at that one. Quite a bit of heavy volume suddenly coming in. And even Chalet Hotels for that matter, 2.5% move suddenly coming in on that one. On the losing side, it's Happy Forging, Sundaram Clayton and the rest of the names which are there on the list. But but Kunal, anything on the charts of Amara Raja batteries or Chalet Hotels that would warrant a look?
Yeah, so Chalet Hotels is something which I think is looking attractive. It's confirming a flag pattern breakout. So the move for Chalet Hotel in the last 1 month, specifically from 550 levels to 650, is quite attractive. It's also on the back of some heavy volumes for the stock. So I think there was a point where the stock moved from 550 to I think 610, 614 levels, and that was a jump of volumes, almost a 20x jump of volumes for the stock from an average of 1 lakh, 1.5 odd lakhs towards 20 plus lakh for the stock price. So I think that's been a change of trend for Chalet Hotel, and is now seemingly the stock coming out of a consolidation. So would be keen towards buying the stock even at current levels, and with this formation, it could probably lead to another 30 to 40 point jump into the stock price. So which means closer to 700, 720 as a target.
In fact, not only Amara, but even Exide is crossing the 300 mark. Between the two, between Amara and Exide, which chart looks better to you? Nooresh, you want to take that one?
So actually, both the stock look pretty interesting, but Exide looks promising for the fact that it is making new all-time highs and has been trending strongly. So for a choice, it is Exide which looks more promising.
Okay, point taken. So both of those charts look quite attractive. But on that note, Mahantesh, we let you go. Thanks so much for making time and speaking with us as we head